I see a lot of videos with similar name to this one where you're offered to 10x your initial investment with the best trading strategy or by investing in the next 100x coin, and this is not one of these videos. This is not some super secret and advanced strategy, it's actually pretty simple and it's fully executed on a spot market, and on the initial portfolio size of $5,000 I earned $2,675, which is 53.5% profit just in January of this year. So stay tuned and you will learn something new for sure in this video. Hello everyone, I'm Željko and welcome to Crypto Grit. As you can see, I finally took the cast off from my arm, and as you can see, I will have a nice memory from Malta. So here it is. As I said, this is not some magic strategy, it's actually pretty simple, but it requires enormous consistency and sticking to the plan, and it requires some initial manual labor work from your side as well. In return, you get a great consistent returns that you can replicate over and over again and compound returns over time as well. This strategy will have few steps, and I encourage you to watch the video till the end to understand the whole strategy and why we are approaching it in this way. Returns on this strategy can vary based on multiple things, depending on the coins that you pick to execute on, depending on the market conditions, depending on some parameters and how you adjust them and how you increase or decrease the risk levels. But in general, if you stick to the things that I explain in this video, you should achieve really good results over the longer period of time. So let's look into the first step. The first step with this strategy is actually identifying coins that you want to use. So this is honestly something that is important for every strategy. You don't want to pick some coins that will eventually go to zero, and if this happens, you can potentially lose majority of your funds. So at some point you need to decide where you want to actually exit and where your thesis is wrong. Like if you use this strategy on Bitcoin, that's possible as well, but like since Bitcoin has lower volatility in comparison to altcoins, potential returns will be lower. So the lower down the line you go, the better it is in terms of like short-term gains. But obviously you want to pick something that has good fundamentals and that has potential to go up in the future. Also, you want to pick something that is in the ranging market or it's in slow uptrend. You don't want to pick something that's consistently falling down or where it's very difficult to identify support levels, for example, or where the gap from the current price to support levels is extremely high as well. For finding new coins, you can use CoinMarketCap, you can use CoinGecko, you can use Crypto Bubbles, you hear for new coins on Twitter, you hear on other social mediums. And for you to even nail down this step, it's something that requires time, and you will need to research 100 coins even more and to look deeply into each of them to be able to understand what each of them is doing, what's its advantage to the competitors, and does it actually have potential. Once you look into the supply, tokenomics, team, and other details about the project, usually you want to look at the charts. So one of the things that is not great for this strategy is if you look that the coin is close to its high, as we can see here, or for example, it's breaking local high, as we can see here, for example. You also don't want it to be like Litecoin, which is just falling and falling over time, and it's really difficult to expect some increase in price over time. Even during the bull market, it will probably underperform Bitcoin, for example. Something like this is great. We had some uptrend, now we are consolidating in some range. Also, this is a small cap, so you should be careful. Render is also a great example, but you would want to enter it area at around 3.8 or something like that, not when it's closer to the previous highs. Aptos would be a good example here. I would dodge Link from this list. ADA could be solid as well. Injective looks decent also. So pretty much you got the point. You want to see some kind of an uptrend, but you don't want the project to be at a local high or all-time high. Of course, charts are secondary and you don't need to be technical analysis experts in order to execute this strategy. It's something that comes after the actual fundamentals of the project and that you believe that, for example, here that it can go to 41 level or something like that. If that happens, you will actually make great returns with this strategy over time. Also, if the altcoin season hits, it will actually make you faster gains and faster returns. And the best moment actually to start with this would be at some kind of a pullback for Bitcoin, because usually altcoins follow Bitcoin. So if the Bitcoin starts retracing, you can expect similar thing. But the advantage of this strategy is actually you don't need to worry if you get some smaller pullback. It will actually yield higher returns for you in the long run. So let's go to the second step. So second step of this strategy would be to add all these coins that you believe in to the list and that meet the criteria for the first part, and that you actually calculate volatility for each of them. As you can see, this list was created just before the end of the year. I pretty much calculated volatility for Bitcoin just to be able to compare it with the other altcoins. Pretty much if you see like volatility of like 2.26 and you see volatility of 3.7, this means that if we get a ranging market, that you will get like 1.5x better returns for Matic in comparison to Bitcoin. As you can see, as you're going down the line, you can see some coins that have like extreme volatility, and like using this strategy is highly beneficial, but you need to be careful that you don't pick something that will go to zero eventually, as I mentioned. Since if that happens, you will either experience a large drawdown or even you can lose the whole part of your portfolio in this way. So usually what I do in order to calculate volatility, I pull the pricing. For example, you can go on any asset. Let's say if you go to Solana, you can look at the historical data, and pretty much I calculate 1 year volatility and I calculate 90 days volatility. If you go to the lower time frame, it doesn't make almost any sense. If you go to larger time frame, it will give you higher number for the volatility, but actually like the volatility is decreasing over time. So I think 1 year is just enough to get like close to accurate results and close to something that you were actually happy with. Even if you look at the volatilities, 90 days and 1 year volatility are like pretty close. And even if you see some huge discrepancy between these two numbers, usually this means that in the last 3 months we saw some huge increase in price or something like that spiked volatility recently. Usually like the 1 year volatility is more realistic and something that you should expect to continue. In general, the larger the coin, the smaller the volatility, but it doesn't necessarily needs to be like that. If you look at XRP, you will see that it has super low volatility even though it's in a ranging market, so it's good for this strategy as well. To be honest, I'm surprised that you can't find on any data analytics tools the volatility of each asset. I will probably create a sheet and post it in the description on this video, and you're gonna be able to download it. If I haven't done that already, you can ask me for the specific coins that you want and I will calculate the volatility for you. So calculated volatility of all the assets on the list. The next step is to actually pick the assets that you want to execute strategy on. This is something that you have to do manually and you want to minimize the risk, while from the other side you want something that's higher volatility and that's something that would go up in the sooner future. If you manage to pick something that goes immediately like 20-30% up, you can immediately take profit and switch to other coin, and on this way pretty much you will already start making profits. Let's say that I look just into the volatility here and I pick something that's highly volatile, for example Toshi coin. You maybe already saw the video where I mentioned like some disadvantages of trading low volatile assets, because exchanges can actually manipulate the prices more, and that's exactly what was happening on a Toshi pair, for example. And if you look at the chart of Toshi, usually you can see that the support area is around 0.0008 and that it has resistance levels at around 0.0018. And the next thing that you're doing, you're actually creating a grid, the number of grids, it really depends on you and it depends on the size of your portfolio. Let's say if you're willing to devote 5k to this strategy, as I did in my case, you want to have usually 50 grids. Here, for the purpose of the video, I created 100 grids because it's easiest to explain this to you. So usually you want at the lower side of the grid, you want to have support levels on. So what I did here is like I tried to create like 1% decreasement from the initial price, 2% decreasement, and then you, based on these two columns, you can see how much buys you will have until the certain price. So at the number 20, let's say if each of the buys, let's say the midpoint is 50, so pretty much you will buy here for 100 bucks, you will buy here from 100 bucks. Same applies for the upside. You will sell here for 100 bucks, you will sell here for 100 bucks, here, and so on. So as I said, it's pretty simple, it doesn't require any TA from your side, and each time the price is decreasing, you're buying more assets and you're holding more assets. Each time the price goes up, you're selling and you're pretty much cashing out. And on each this transaction, let's say if the price goes to this level and then again returns, you're making around like 2% on 100 bucks, which is $2. If you look at like each transaction separately, that's really a small amount, but remember that sometimes you can have like 2 to 300 of these orders daily, and this accumulates over time more and more. When it comes to creating the grids, you want to come up with some numbers that are easy for you to remember, easy for you to enter when you're creating buy and sell orders. And here, for example, I calculated what if each order would be like 0.00005. Here I did the same with 0.0025. And for example, if I would have 50 different levels, what would be like the lowest price to which asset could go that I still have funds to add up more. As I said, if the asset starts going to zero, this is super risky approach. Pretty much the wider the range, the more covered you are. But if you don't have this decrease in price, you will pretty much make almost $0. So the best possible scenario is if you buy, let's say for the 20% of your assets, let's say if you have 5k, you buy immediately for 1k and you create the next 10 sell orders. So for example, to here, if the price goes immediately 10% up, you would make 5% because your average sell would be like the middle of this. If you would buy with 40% of your money and each order is valued at 100 bucks, you would pretty much immediately make 10% if the price goes 20% up. So this might be slightly confusing, but you should be aware that you never have the price movement that is going like straight up. Usually what you can see up, down, up, down, up, down. So pretty much you would be, let's say if you enter the strategy here, you would be buying here, selling, 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 then again buying, 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 then maybe sell here, then again buy, 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 and you will have multiple sell orders here, for example. And if you look at my orders currently, you can see that I'm still executing this strategy. I'm buying here, selling here, and currently, like from the initial 5k at the start of January, with just this strategy, I'm at 9.5k currently. So each of the orders doesn't give you a huge amount of money, but you need to be active and to create orders as soon as one on the exchanges actually execute. And the higher volatility asset that you pick, you will actually have more orders to create. The wider the range that you create, you will have more orders. If you want, you can like do this for every 10 percentages, but then obviously the profits would be smaller. If you look at my strategy, I'm executing on every 0.000025, which is actually pretty frequent, and each of my orders is 100 bucks. So each time that the order executes, for example, if you're buying for $100, you can choose to have a sell order. For example, if you buy at this price, let's say for $100, and you're selling it at this price, you can like pick if you want to make $1-2 per order, or if you want to save underlying asset. So if you expect the price to drop in the future, it's much better to save in dollars. If you expect the value of underlying asset to increase, it's much better to save that asset, obviously. So, and then there are again two possible approaches. So if you're saving in underlying asset, you can sell it like slightly higher range. Let's say you sell it at like 0.002, or you can even like on your top order, for example, let's say your top order is here, you can then add one more order which is above this, and you will almost double the money if you're at the mid of the range. If you are scared that the price of an asset will drop even below this range, then you can save dollars and you can add order below this, and if that happens, you will accumulate way more assets. So this is really up to you, and this is up to your thinking process. I usually make decisions based on the current Bitcoin price, and if I expect the pullback on BTC, usually I like to take more profits in USDT. If I expect the price of BTC to increase, I usually take more profits in the underlying asset. So I hope that I explained everything clearly. If you need some further explanations or if you have some questions, you can always ask me in the comments below. This strategy is actually weird for many people because a lot of people are actually waiting for 2, 3, 5x. With this, you can make 10-20% multiple times. And I think that it's much easier to make, let's say, 10 times 20% than to make, let's say, 3-4x, especially if you go to the higher levels. That's almost impossible to make. It's impossible to have that great entry and that great exit as well. Also remember that for the people that are executing this strategy, you will be pretty much creating selling pressure for those that are actually waiting for the price to go way higher, and you will always make the profits, and it will never happen to you that the price reverses and starts dropping down and that you haven't actually sold anything. The disadvantage is the opposite. The disadvantage is that the price can continue rallying up and that you sold all of your assets. But even with this strategy, you can create some scaling mechanism where you're actually keeping some of the assets once you make the profits on it, or when you realize that you're approaching to the top of the range, that you increase the increments on a higher levels, and this is something that will allow you to take more profits. Obviously, you can add some TA into this, you can add on-chain analysis, and you can add many things to this strategy, but this is, in my opinion, some general principle and something that you should use. This learns you pretty much to scale in into the projects and scale out of the projects. Also, you should never do this with the entire portfolio, because if you pick just one wrong asset and the price of that asset goes to zero, you will pretty much have a lot of that asset which will be useless because its price dropped to zero. So you need to be careful of that. I use this and similar approaches through the last few years, and it's something that gave me great results. Also, I hope that you like the video. If you have any questions or anything, feel free to write them in the comment below. If you watched the video till the end, please consider subscribing. Thank you for watching. Stay strong and healthy. Bye.